As you can see from the chart, the scenario we laid out has played out to perfection. Just as predicted, smart money engineered a corrective rally, creating a classic bull trap. Price retraced exactly into our target premium zone of around $4,640 to $4,660. This move was designed to induce retail longs who believed the bottom was in and to capture the buy-side liquidity resting above the recent highs. Once that liquidity was taken, smart money heavily distributed their short positions at a favorable price. Immediately after hitting that peak, we see the aggressive and decisive move down we were anticipating, a perfect execution of the smart money trap. So the fair value gap setup worked perfectly. Just as anticipated, the price engineered a corrective rally to perfectly fill the bearish fair value gap in our premium target zone. This is a classic smart money maneuver. It allowed the composite operator to load up on additional short positions at a more favorable price while simultaneously inducing retail longs, creating fresh buy-side liquidity to target. Once that FVG was mitigated and the liquidity was engineered, we saw the aggressive markdown we were waiting for. A textbook execution.